student. Right, good. Now the class is on record now and my screen is on, so let's get out this chart and go to our main chart. So we are going to put this, try and put, okay, let's go to our order chart, let's go to our price chart and let's get this off, and trading view, that is what we are going to use. We can move this to somewhere else. Right, and
I can see your screen.
You can't see my screen? Who else cannot see my screen? If you can't see my screen, please let me know.
Yes, sir.
Who else cannot see my screen? Who else is unable to see my screen? If you are unable to see my screen, please let me know. Mr.
I
can see now. All right, good.
Yes, it was the network. I can see it now.
All right, that's good. So, and before we get it started, there's a free seminar tomorrow in Ibadan at our Ibadan branch. So those who are in Ibadan can come with your friends, your loved ones, right? Come along with your written materials and your laptops, your smartphones, so that you can learn one or two things, right? So right, trying to speak, turn on. I think my mic is on. My mic is on. Okay, now in the last class we discussed the okay, who is still in the class unable to create or verify his or her account, so that I can help you to connect HF markets and get things up to them, because you shouldn't have any difficulty creating your account. If you are here and still unable to verify your account, please let me know, signify. All right, I believe everyone has created their account. Now, in the last class we discussed, can someone recall me what we discussed in the last class, please? Can someone recall me what we discussed in the last class? Can someone recall me what we discussed in the last class? The video is already on the YouTube and I've sent the videos in your group. So please, can someone recall me what we discussed in the last class, please? I need answers.
We are still at the triple candlestick. The one we did last was the three white soldier and three black crown.
All right. So we did the three white soldiers and the three black crows. So I believe we have all known what the three soldiers and the three black crows are all about, so that we can move on to the next topic. Or do you want us to repeat it? Let's just quickly do a revision. Let's do a revision of our price chart. So the three white soldiers, when we say three white soldiers, the three white soldiers indicate continuous aggressive buying through the formation of candlestick which are three in numbers. So these three candlestick in numbers signify strong buying sentiment in the market or liquidity. So whenever you see this type of candlestick on your price chart, it means there is a strong buying order in the market. So based on what I told you, I said this candlestick, whenever you see them, there's a way you can trade it, right? And I told you the opposite of this candlestick is what we call the black crow. So we have the black crow. The difference right here is the black crow supports a bearish sentiment in the market. So whenever you see the black crows, you should know that okay, the market is indicating a higher possibility of price pushing to the downside. Now let's put their name respectively. We have the bullish candlestick on the left hand side. That is this is bullish, so it's the three white soldiers. Three white soldiers, right? Is my soldiers correct? Soldier, is it correct? Now we have the three black crows. The three black crows. The three black crows. So this is what this candlestick all mean. So this is the three black crows and the three white soldiers. Now how can you trade them? I told you in the last class, I said to trade this candlestick, it all depends on the time frame you have seen this pattern. The time frame this pattern occurs would determine how you should trade this candlestick. And I told you in the last class, I stated, let's say for instance, this candlestick appeared on the day chart. It means 3 consecutive days it's a strong bullish price action. When I say price action, I'm referring to the formations of each print of candlestick on our price chart. So the summation of each candlestick on the price chart is what we call price actions. So these are patterns that have been printed in the past and are still going on presently in the market, right? Now, when you see this candlestick on your day chart, you should know that each candlesticks that form on your trading chart represent 24 hours in a day. That means each candlestick means the trading activity for that business day. Either it be forex, crypto, stocks, commodity, index. But the stock market, the commodity market, some of these assets, or especially the commodity market, is not up to 24 hours. Right now, but the forex market trade from Monday to Friday 24 hours, whereas the crypto market trade from Monday to Sunday 24 hours 7 days. That is for crypto. Right now, for you to have a weekly bar on cryptocurrency, it requires 7 daily candlesticks, and for you to have a weekly bar on the forex market, you need 5 daily candlesticks. And for stocks, you need 5 daily candlesticks, but the daily candlestick won't be up to 24 bars on the 1 hour chart or 6 bars on the 4 hour chart. Right now, since we have seen the 3 bullish consecutive candlestick on the day chart, it means, let's wipe this out. Right now, let's say for instance, this is Monday candlestick, Monday, and the second candlestick right here is Tuesday, and the third candlestick right here is Wednesday. So it means the opening of this week has been what? A bullish price action. This is what it meant. Now let's say for instance, this candlestick right here forms on Thursday, this on Friday, and this on Monday. This means starting from Friday, the market has been going in a downswing to the extent whereby the bearish extended to the new week on Monday. So this is what this candlestick means whenever they form on the day chart. This doesn't mean they have to start on Monday and end on Monday. They can start anytime they wish, or whenever price action decide to print them on your trading chart. So this candlestick can start on the last day of the week, Friday. That is the last business working days in the forex market. So if it start from Friday, the next one will be what? Monday, and the third one will be what? Tuesday. It means the end of last week started with a strong buying sentiment to the new week. The same thing is applicable on the 3 black crows. It means 3 consecutive selling days, or on the bullish side 3 consecutive buying days. And I told you, I said, for you to trade this type of candlestick in the market, you can place your entry at the last bullish candlestick of the 3 white soldiers, and there you place your stop loss at the low of the last bullish candlesticks. Right, so you continue the rally all the way up. Likewise, I told you, I said, for you to trade this pattern on the bearish rally, you can make your entry at the close of the 3rd candlestick and place your stop above the last, which is the 3rd candlestick of the pattern, and you go what? Sell down. Now let's see this candlestick on the day chart right here. This is the chart of the British pound sterling. The patterns we have at the left hand side right here is what we call the, okay, let's use this. The 3 candlestick right here is a what? Is a 3 white soldier. This 3 white soldier failed. It failed. You can see how it failed. The market did what? Crash. Now let's zoom out. The reason why this failed right here was because there was a supply on this level. We are still going to talk about supply in the later course. There is a supply at the level. Even though price broke this level, the market still dipped down into this supply. So number one, this is to tell you that there isn't any guarantee because a candlestick forms on your chart, and this is why you need to always have a stop loss in place. This also tells you there isn't any 100% infallible trading concept or candlestick or trading strategy. Right? Now let's wipe this out. This candlestick failed right here. Now at this zone here, this candlestick, what? It worked out, even though it didn't move too much. Now the question is, why didn't this candlestick right here work out, and why didn't the one right here move the market into a higher level before it reverses down? Now the question is, the answer is, for you to trade the 3 white soldiers candlestick on your price chart, for you to trade this candlestick, it has to form after in a downtrend. Now let's go back again. As you can see right here, the market pushed down here and then reverses upward. The best zone for this candlestick to have formed would have been at the low of this bearish swing at this medium, and not at the top. Now this introduces us to the concept in trading which says, do not buy high, buy low. Do not sell low, sell high. Now let's wipe this out. Now based on this concept shows us that if the market is going up, do not buy high. Look for a medium whereby price will push down, then you buy it low. This is based on the concept of negotiation. Now let's take for instance, you walk into an automat, right? Yes, automat, and you want to buy a Toyota car, right? And the dealer tells you this Toyota costs 1 million naira. Now you want to negotiate the price. Mr. Kolade, do not sleep. I can see you in my cam. So you feel like this 1 million naira tagged on this car is too expensive. I should be able to negotiate all the way down. So you go down to 700,000. The reason why you want to buy at 700,000 is because you want to buy it cheaper so that you can save some in your pocket, right? Now this same concept is applicable to trading. So instead of you buying at a higher or at an expensive price, you look out for price to push down so that the price will be reduced, and you do what? You buy it at a lower level so that you make more profit and you reduce your risk. Why is this so? If the market costs $100 at this medium and the market make a swings all the way down, we have what? Higher low swings at this level. Do not worry, we are still going to talk about higher low swings, and the market goes up. If you are making your entry at this zone as your entry, the best zone to have your stop loss in this market based on the concept of market structure is to put your stop loss at the last higher low swings, right? Now if you made an entry at this level, your risk is too wide. Now one of the ways in which you can reduce your risk and tend to make money is to let the market to come to a cheaper price, whereby the market comes down to like $50, then you buy it at $50. Now instead of you risking like $100 pips from this level to this level, you do what? You risk just maybe 50 pips, right? And then you make more money. By the time you make an entry at this level and the market goes up, let's say you make $50 right here, but by the time you make an entry at a lower structure, by the time the market get to this level, you made what? $100. You make money than the person who buy it at a higher level. This is based on the concept of, if you purchase a landed property for $1 million and there's someone else purchased the same house at the same price at the same location for $500,000, that means this person purchased it at a better price. So if both of you are willing to sell, and this person is willing to sell for 1.2 million and you are willing to sell for 1 million, there is higher probability you get a buyer to buy your property than the person who wants to sell at 1.2. And you do what? You make extra profit of 500,000 naira. You make more profit. So this is based on the concept of buying low, you buy low, and the opposite, which says sell high. Now let's say for instance you are a seller, market is currently trading at $100. So instead of you to sell your goods at $100, you prefer the market to rise up to be $200. If you sold at $100, if you sell at $100, then it means you make what? You make more profit than the seller who sells his item or who sold his item as $100. So that is the concept of trading. Now we are going to replicate this concept to our trading activities in the market so that we can have the opportunity to have a large profit and reduce our risk. Okay, now this is based on the concept of this three white soldiers whereby it failed. Now let's say for instance, as the market push all the way down to this level, as the market is reversing up, the three white soldier forms at this level. This would be a good zone for us to buy it because the market has depreciated in value. But when the market is at a higher level at an expensive price, the tendency that the three white soldier will fail is higher than when it has a lower swing structure. So for now, do not worry if you find this concept complex. As time goes on in our trading career, you will find them easy to understand. So the same thing is applicable to the three black crows. This is an example of a three black crows in this downtrend. This three black crows is forming at a lower structure. Instead, it should form at a higher structure for us to have an opportunity for a higher profit ratio. Do not worry for now if this sounds complex, but for now just have an idea of the three white soldier and the three black crows. So this brought us to the end of candlestick pattern in trading, but this doesn't mean that is all the candlestick in trading. I told you I need to introduce you to the candlestick with the higher probability ratios in trading. There are a lot of candlestick patterns in the market, but you do not need to trade all of them, but it's better you understand what they mean, or you are able to interpret the information they are trying to present to you whenever you see them in the market. And you do not need to trade everything. Likewise, you do not need to trade all the time in the market, right? Hang on, please. Hang on, please. So I'm just trying to. Okay. All right. Now we are done with the candlestick pattern. Before we proceed to the next class, please, I want to ask each one of us in this class questions. I want each one of us to name at least 2 or 3 candlestick, you can still remember. We discuss a lot of candlestick. There are more than 5, more than 6 pieces. I want each one of us in this class to send a message, type a message through your chat box on your device, 3 candlestick patterns you remember which we discussed. Just send a message through your chat box so that this can be easier for us to go. This will be easy for me to go through. Just send a message through your chat box on your device, or your laptop, or your smartphone. Send a message, the 3, or at least mention 3 candlestick pattern you can remember, or you remember, or which is your favorite of the ones we've discussed in this trading course so far. Just type the names in your message box, in your chat box. Mr. Kolade, please type the candlestick patterns, your favorite of which we've discussed in this trading course so far. I'll go through the message box right now and see each one of us messages. Please send your messages. Let me see. I'm waiting for the messages. All right. Okay, I have someone right here. Someone type is, someone said Doji Star, right? Please, every one of us, we have to partake in this assessment, in this assignment. Please type at least 2 candlestick you can recall. At least 2 or 3. Type 2 or 3 candlestick you remember we discussed. Please, I need to know we are all following along. I'll go to the message box again. Only one student has given an answer, right? We have bullish pin bar, bearish pin bar, bullish Marubozu, bearish Marubozu. Thank you, Mrs. Olalua. Thank you so much. You mentioned 4. That is amazing. Thank you. Thank you. I see one more answers in the class. We can do more than this. Mr. Olalu already mentioned 4. We can still do more. Mr. Odinaka mentioned 1. I want more. Please, Mr. Odinaka, I want more. Mr. Kolade, I'm waiting for you. Mr. Ahmed, I'm waiting for you. And Mr. Ifeoluwa, I'm also waiting for you. Mr. Ahmed, thank you. Mr. Ahmed, Aramic candlestick pattern for continuation of the trend. Thank you. Inverter, inverted hammer. Thank you. Shooting star, bearish pin bar, gravestone, dragonfly. Thank you. Thank you. Thank you, Mr. Ahmed. Thank you. Thank you. Mr. Kolade said hammer, pin bars, hangman. Thank you. Thank you. Thank you. Thank you, traders. Thank you. Thank you. I'm happy. Now we can move on to the next class. Okay. Now, let's move to the next class. So, in the next class, right now, we are going to Mr. Odinaka. You raise your hands. Go on, Mr. Odinaka. Go on. Ask your question.
Yeah, just in the PDF you sent, there are candlestick that's candlestick high and low, more bearish, more bullish, less bearish, and less bullish.
All right. You want us to talk about that, right?
I don't know. It's on the PDF.
All right. We've discussed this, but I'll repeat it. The first day we started, we discussed sizes of candlestick. I told you this bar right here, and the next one right here. This is longer than this one, so it means this one is stronger than this one. And I told you this candlestick sometimes they can have upper shadow, and they may not have. This can have. Sometimes it may not have. but the body is very important. So this candle B is bigger than the candlestick A. This is what the sizes at that level mean. The same thing is applicable to the bearish candlesticks. So a bearish candlestick, you can use any color to represent your candlestick. Alright, so this bar right here is a bearish candlestick. The other one right here is also a bearish candlestick. So this one of the B is what? Stronger than the one of the A. So those are sizes of candlesticks. So there's nothing special about that. Those are the concept things we can easily read and understand. Right? Is that clear, Mr. Odinaka, or there's still more things you want us to discuss under this section?
No, it's okay.
All right. So the bigger the candlestick is, the more power it holds, and the shorter, the smaller it is, the less powerful or reliable it is. And that is where we formed what we called P-Knot candlestick. P-Knot candlestick are irrelevant because of the low volume on them. That is the reason why we said they are P-Knot. They are irrelevant candlestick in the market because they signify no potential interest or liquidity, right? Like this candlestick, you can see right here, all these green candlestick, they are what? Strong candlestick, they are reliable candlestick patterns. But all these small ones you see inside, they are what? P-Knot because they have insufficient volume or liquidity, right? So that is that. Is there any other thing you students in this class wanted to discuss before we move on to the next class? Can we move on to the next class now? Mr. Kolade, you can go on. Ask your question.
I want to make a suggestion.
All right.
It is somehow clearly written on all those candlesticks. Can you just make a PDF whereby you just spell it out? Whenever you see few soldiers, like this is bullish sentiment for, sure you understand?
All right.
Maybe whenever you see a timber, you know, for someone who has recognized them by your explanation, just like, okay, you are still an inverted whatever, this is bearish sentiment, just like that.
So you want me to make so you want me to make something like a tabular table whereby I'll put each candlestick, so that I will just say whenever you see this type of candlestick right here, whenever, let's say for example, whenever you see let me rule this. No, let's,
yes,
so just have something like this, and I say okay, whenever you see this candlestick right here, it is what? Bearish, right? Whenever you see this candlestick pin bar, it is what? Bullish, right? Is that bullish. What you mean?
God bless you, sir.
All right, I'll work on that.
Thank you.
You're welcome. So is there any other question, any other suggestion? Can we move to the next class? All right, I believe we can move on to the next class right now. So in this class today, we are going to discuss trend market structures. Right? We are going to discuss market structure. Hang on. I'm trying to take a trade here. I'll be monitoring a trade. I want to take the trade. All right. Okay. Hang on. Just exercise patience, please. I'll be monitoring a particular trade. The trade is going on right now, so I need to quickly take the trade. I will show you the reason why I'm investing in that trade, so that next time when you see it, you should be able as well to do something like that. All right. Okay, good. and they're good. So I took a trade on US oil. Let me show you the trade on US oil before we proceed to the next class. So this is US oil, and this is what I have on US oil. The reason why I'm taking this trade is based on what I have on the weekly chart. So this market has been trading at a demand zone. It has been trading at a demand zone. So I got a signal to long. So I bought at this level currently right now, and I placed my stop loss lower at the low of the weekly bar, and there is a level I'm targeting. So based on this downward slope, I'm targeting the upper band of the descending trend line. So if this trade should go in direction of my anticipation, that means I'm looking up to make times 3 of the amount I invested, right? So this is what this trade is all about. So let's see how the trade goes. I'll update you how it goes. Well, this trade could take like weeks because it's a weekly entry, right? So you can just put down today's date on the chart. Let's see how far this trade can go. So that is that. And for those who are crypto traders, I took some trade on Notcoin cryptocurrency. We are currently in a massive profit on the trade. So those who are in the class can see what we are doing. These are some of my students in the Telegram group. If you are not yet in the Telegram group, you are missing. As a trader made 258%, another trader made 198%, another trader made 244%. You can see that. So a lot going on in the community. Just make sure you are active. This was the trading signal I sent in the morning. So this was the entry area. After I sent it out, some traders took the trade. So these are some of their profits. This trader made 244% over 244. This trader made 198. Good evening.
I do that on coin. Please, can I see it now?
You what?
Not coin. I miss that. I didn't enter the trade.
You missed out. Maybe you are not sure of the setup, or maybe you do not understand the reason why the trade should be going up. But I believe you got the signal when it was sent in the community. Did you get the notification?
Yeah.
So why didn't you take it? You don't believe in the setup?
That's not too clear to me.
All right. If it's not clear to you, then it is okay not to take it. All right. So I'm currently in the trade, and let me show you how we got in. I'm using a different chart. So let's just try and see what we have right here. So let me put another chart here so that this is the trade on the oil, my own chart. So let's go to Notcoin. Please, we are going to get back to our class. I just want you to see the overview of how we take trade. Now, this was where we got an entry this morning. Let me move the chart to hand. Now, do not be scared on this chart here. If you do not understand what you see here, you can see you are seeing blue and red. My blue means bullish candlestick. Don't be scared. My blue means bullish candlestick. My red means bearish candlestick. So I made an entry at this zone, and I had my stop loss at the low of this bar. So currently, let me show you the amount I've made in this trade based on the amount I invested. So based on the amount I invested in this trade, I have made times 1.3. So let's say, for instance, if you are taking this trade, let's say for instance Mr. Kolade, let's say for example Mr. Feoluwa got into this trade, and Mr. Lua invested $1,000. Mr. Feoluwa would have had something like a extra $1,300 now as profits apart from the 1,000 invested. So if you had it plus the 1,000 invested, then that will be $2,300. So, and I'm still holding on to this trade. And then this is not the only trade I took. Those who have been following me know I took a trade on Wednesday as well on Notcoin. Let me show you the profit I made. I took this trade around this zone on Wednesday. That was on Wednesday around this zone before the market broke out. I took the trade here and I placed my stop loss. We targeted all the way up, but the market didn't get there. We were able to close out. So I was able to close out on 1:1 ratio. So let's take, for example, Mr. Kolade invested in this coin here on Wednesday. Let's say, for example, Mr. Kolade invested like $10,000. Mr. Kolade would have profited additional $10,000. So that means the total amount in Mr. Kolade's account will be now be $20,000, right? So the more money you put, the more profit you make, and the small amount you put, the small amount you make. So that is it. So that is how I've been making money on Notcoin throughout this week. You know, I've been smiling all the members in my community. All the trading signals are in the community. You can go there and check and confirm it, right? So I have a lot of market and monitoring. So do not worry, students. You are not lag behind. Okay. Once you have known how to buy and sell, then you start receiving signal. Then you know when to get in and then when to get out, right? So I have a lot of trade, but to just make things to be shorter, let's go back to the focus of our class today. I just want to show you guys to know, so that you can know that it is trading is real. You can make money, you can make a living from trading without doing any other thing. You can trade and make money, and you stop your other work. Once you know how to trade, you trade full time. You can trade wherever you are in any part of the world. You trade, you make money, you withdraw your money. It's a legit business. All you just need is the knowledge, right? So that is how I trade. I make money, and you can see there, Mr. Ifeoluwa saw the trade, but Mr. Ifeoluwa was not confident in the trade. Mr. Ifeoluwa would have smiled to the bank this weekend. Maybe Mr. Ifeoluwa wouldn't have been in this class today. Mr. Ifeoluwa could have been at maybe a nice bar this evening for thank God it's Friday. Mr. Kolade, you can ask your questions.
Are you still going to teach us, or maybe I missed out in the class, how to enter the trade?
Yes, that is the process we are going through right now. You know, before you can enter a trade, you must have a reason to enter a trade, and those are the things we are currently working on now. The reason why you want to enter a trade, is it because of a bullish engulfing bar? Is it because of a pin bar? Is it because of a Marubozu? Is it because of a Arami? Is it because of a steady white soldier? Those are the things you need to understand. So you need to know all those things before you can start buying and selling. Because when I tell you, okay, for example, right now, let's go back to this group, what I posted in this group. Now, let's say, for instance, I sent this out to you in the morning. Let's go back to the trading signal. This was the trading signal. Okay, this is it today. Today is 27th, right? I sent it out early in the morning today, right? Now, let's see, maybe we can have the details. Okay, we can have the details right here. Let's see the report. No, okay, no, it's not report. Personal details. No, okay. Now, when I sent out this trading signal this morning, when I said not USDT trading signals, long position XL 0.0078, entry 0.00860, TP 0.02200, more trading signals coming in the VIP mentorship group. Ensure healthy risk and money management system in place. Can someone who is a beginner in this class interpret all the terminologies right here for me? Can someone interpret it? No one can interpret it except Mr. Ifeoluwa. So this is why I say you still need to learn these things before you start trading, because if you do not understand this concept, you won't be able to take a trade. It will just look like a magic, like Arabic. So that is why I say you need to learn this thing. Do not be in haste, right? There are limited opportunities in the market. See, I'm right there for you, come rain, come shine. So I'm right here to guide you on the right path, right? Do not worry. The money in trading is unlimited, right? The money here is unlimited. Nobody can make all the money in this business. It's unlimited. You just come in and pick the one you can take and go out. Another person come in and take and go, right? Good. So let's just take it each step, right? One step at a time. Okay, we don't need to rush. All right, good. Now let's get back to the topic. I currently made the trade on US oil, and the reason why I made this trade right here is because I can see price as a demand. Of course, I'm trading against the direction of the momentum. The downtrend, the market here is downtrend, but I have a reason for taking this trade, and I know this is a risky trade, and I reduce my position size, and I'm targeting times 3 of my risk, and I'm going to be holding this trade for weeks. So I have a reason for taking this trade. I know what I can see right here. You guys can see what we have right here is a pin bar. A pin bar at a demand structure based on past historical actions. This level have been holding price since what? November 2021. Whenever price get to this level, we always have a bounce to the upside. In November 2021, bounce to the upside. March 2023, bounce to the upside. 11th of December 2023, bounce to the upside. Now September 2024, there's a higher possibility of what? Bounce to the upside. So that is it. There isn't any magic here. You just have to understand the concept, and this is what I'm walking you through right now, so that you can understand the concept, so that when I show you where to fish, where to pick fish, where to pick money, you'll be able to identify it. We have a case now in the class whereby Mr. Ofeoluwa saw the information, but Mr. Ofeoluwa couldn't take the trade because Mr. Ofeoluwa didn't know the reason why we want to make a trade in that coin. So that's an example. There are some situations whereby I may send out trading signals to you or set up. If you do not understand it, this will weaken your confidence. All right, now, so that is it. That is that on taking trades in the market, right? So I took a trade on US oil. I already invested right there. Let's see how far that trade will go, right? For those of you who missed Notcoin, do not worry. There are lots more coming in the group, and now I'm now constant in the group, and I'll be providing free trading setups ideas, right? Just make sure you understand this setup and manage your risk, right? And for those of you who are the VIP students, do not worry. You have lots more opportunities than those who are in the free Telegram group, because whatever I'm doing from my side, on my side, I will always share with you and I will guide you. And this is why I'm your mentor, okay? Do not worry, you will make unlimited or good return on your portfolio once you can follow the instructions given to you, okay? Good. If I can do this and make money from this as a source of living, then you as well can do better, right? Just understand the concept and I follow the instruction I give to you, okay? Good. Now let's go to market structure. Market structure. What is market structure? First thing right here is, as we can see in this market here, first, before we talk about market structure, let me introduce you students to something in the market. Those who were in the last class will find this easier or easy to understand, right? Now let's draw this. What does this mean? What can you say about this line going up? This line here looks like a ladder or a staircase of a building, right? This looks like the staircase of a building. It means this staircase right here is pointing upward, right? It's going upward. This is what we call bullish trend or uptrend market, right? This is what we call what? Bullish trend or upward market. I will draw it once again. I will draw this once again. Take note. You can see that? This is what we call bullish trend. Now, let's put the name. Bullish trend or uptrend, uptrend or rising trend. All right, so these are the three names you can call this market. You can call it a bullish trend, uptrend or rising trend, or you can say upswing. Upswing. These are the 4 names you can call this type of movement in the market. Whenever you see it in the market, these are the 4 names you can call this market. All right, now it will get to a point whereby the market will get weaker and the market will get exhausted. When something is exhausted, it means something is tired. So when the trend is tired, then the trend will start going this way, and then going this way, right? So what we have right here is what we call sideways market. We call it what? Sideways market. Sideways. You can also call it consolidation. Right? I have a question to ask one of my students in this class, and I want to know we get this question right. What does consolidation mean on the higher time frame? What does sideways market move means on the higher time frame? What does it mean on the higher time frame? I want answer to that question. Another name for consolidation is range market, ranging. My question still hold. What is a consolidation, medium, or a sideways market, or a ranging market on the higher time frame? We've talked about this. A consolidation or sideways or ranging medium is a doji candlestick on the higher time frame. You have all forgotten. I told you this. You have forgotten. I said when a doji candlestick forms on your chart, it means both the buyers and the sellers are what? At equilibrium. So another name for sideways consolidation ranging is equilibrium phase. Equilibrium. Right? Am I right with my spelling? Equilibrium. Please check it. So that is it. Now, whenever you see that, you know, okay, the market is at equality. The market is passing through the same distance high and distance down. Please, everything we are talking about right here, all these things are important. If you forget these things, you will come across them in future in your trading activity. You can't avoid them. They are inevitable. You must come across them. And once you forget them now, that is the beginning of failure in trading. Please, all these things, go through all these videos, watch over and over these videos. Please, if you really want to trade and be successful, if you want to be among the 5 or 10% of successful traders out of the 100% who trade, only 5 or 10 are successful. If you want to rank among these few people, everything we discuss in the class, always take note of them. If there is anything I discuss or I made mention of which you do not understand, please let me know so that I can repeat myself. By now, I believe when I ask the question of consolidation ranging sideways, I believe you should all be able to tell me what doji candlestick or railway candlestick bar. Okay, good. Now, this sideways market, let's put it up. Okay, now the market now failed to go up. The market now do what? And now start coming down. Now this is what we call downtrend market or bearish market. Now let's put the name. This is what? Bearish trend, down trend, falling trend. If you are in Ibadan, please make sure you attend tomorrow's seminar. Okay? Down swing. You can see that. So these are the three types of trend direction. These are the what? Three types of trend direction. These are what? The three types of trend direction. Don't forget this. So three types of trend directions. We have trend duration. That one is different. We are still going to discuss trend duration, but before we can discuss trend duration, we have to understand trend directions. Thank you, students. This is where we put a full stop today in this class. Is there any question? In the next class, I will do the labelings on these types of trend directions. In the next class, I will label these three types of trend directions. Do we have any question? Ask your question. And then before we go, I would like to ask you students, some students in other parts of the world, South Africa or Europe, other countries, they are complaining about the 8 p.m. and they want us to shift the time to 9 p.m. So I need to ask, is 9 p.m. okay for you traders in this class, for traders in Nigeria, or if you are in another part of the world, continent, is 9 p.m. okay, or do you want us to stick to the 8 p.m.? Please, I need your suggestion. Please unmute your mic and contribute. Suggest, you can drop your suggestion, please.
Yes, sir.
Go on.
In as much as, thank you so much for the class today.
You are welcome.
In as much as 8 o'clock actually seems so convenient for me especially, but not to sound so selfish, so that to accommodate other people, we have to say, okay, we want to move it by 1 hour. I mean to say maybe 9 to 10 then.
Yeah.
I think it's just a sacrifice we here
All right.
should make to accommodate other people.
All right. Thank you.
Thank you, sir.
You are welcome. So is there any other contribution, any suggestion?
I think 9 p.m. is okay.
All right. Thank you, Mr. Ofelua. Do we have any other contribution?
Yeah, I think 9 p.m. will be okay because very soon our time here will change. So.
All right. Okay. So, Mr. Ahmed, Mrs. Olalua, and others in the class, please contribute.
Yeah, 9 p.m. is fine.
All right. Thank you.
9 p.m. sir.
All right. Thank you. So, if you reside in Ibadan, or if you are closer to Ibadan, or if you would like to attend the seminar, accommodation is available. Just let us know on time before the rooms are being occupied, so I can have a good space to pass the night.